Where Matt is.
I am too.
All right. I don't know where he is, but all right. So
Okay, I'm going to stop the share, buddy, so that you can take over here.
we should be on YouTube right now.
Yes, it does show that YouTube
Now we
is
are on YouTube
happening.
right now.
Yep.
Yeah. Yeah. Okay. All right. That's a good question, Mark. Where is Matt? I don't know. Matt, are you here? This is interesting. Is
Let me
he
send,
where is he?
let me do this.
Like it's like talking in code. Can you please come on or tell
Wait a minute,
me
Matt
what?
says, can you upgrade me to a panelist? I had to get
Oh,
rid
he
of.
can't
Oh,
come on
yeah,
because he's not a
okay.
panelist. Why aren't you a
Okay.
panelist, Matt?
So don't worry about that. I'll take care of that.
Okay. Well, like what's going on here today? What what's going on here today?
So
That's a
Matt,
good exactly, Adrian. Is anybody home? That's what I want to know. Like we don't like YouTube is not on. He's not a panelist. Like why? Why?
well,
Why is any of this happening?
let's not do this in front of the whole world. Okay, we'll
No,
figure this
no,
out.
no.
Yeah, but Matt
No,
says,
but
can you upgrade me to a
are you the
panelist?
host? Are you now the host, Matt? No, I mean the panelist. Did you make him panelist?
I
No.
can't, Roger, I can't find him. But let me take
All
care of
right. Let
that, and
me
you
see.
focus
Let
on
me
the people
see.
that are here.
You know what? I let me see if I can make him a pat. Hold on. Maybe I could do it now because I'm the host now. Matt. I don't see Matt here
Mm-mm,
under. No, you don't either, huh?
mm-mm.
That's great. All right. I'm gonna have a little talk with him after this. Okay. Thanks. Thanks. Okay. Let me go ahead and share my screen with you guys. All right, you guys should be able to you guys should be able to see my screen right now. Okay?
Yes, we do.
Perfect. Now, I want to answer a few questions that came up. These are really good questions, actually. Somebody asked me, I'm going to go ahead into my note here. Here, 1 second here. Get my notes here. All right. All right. There we go. All right. This was a good question that I got. What is the relationship between the really good question, folks? What's the relationship between between VIX, okay, and the SPY? The relationship between VIX and SPY is real simple, and I'll show you what it means. Let me just delete some of these things. There's too much stuff here. All right. The relationship between the VIX and the SPY is one where the higher the VIX goes, the more volatility comes into the SPY. Let me explain to you why. There's a real good reason for all of this, okay? A real good reason for all of this. When VIX, the VIX uses the add the money options on the SPY, okay? The add the money options on the SPY, all right? And let me just make sure we are live right now. And let me just see who's on YouTube. All right, if you guys have any questions on YouTube, you can also ask. So what we need to do here is we need to see right here if this goes up above 20, it means that market internals are getting scared that prices are going to go haywire. Now, notice I said haywire. I didn't say going lower. Theoretically, the VIX is not a high-low indicator. A lot of people call it the fear index because they think that the market that it only goes up when the market is going haywire. But that's actually not true. The What the VIX does is the VIX is a index that internalizes. She hasn't moved, by the way, in 3 hours. Um, so the VIX, on the other hand, uses the at the money options of the SPY. And when the add the money options on the SPY are not when the add the money options on the SPY are don't fear that anything is going to happen. Notice I didn't say the market's going to go down. They calm down, and when they fear something is going to happen, they get inflated. So what the VIX is just a really good representation of what is going on with the add the money options on the SPY. Now, believe it or not, if the market is up a lot, like up 400 or 500 points, that will also drive the VIX. That will also drive the VIX higher or lower. So it's not just the market going down, but most of the time, 90% of the time, it has an impact on the market. The biggest impact on the market is this: when you see VIX above 20, it means there's warning shots have been fired. Okay. Now, let me explain to you what warning shots have been fired means. Let me see if I can give you a good representation of that. Hold on one second here. God, I got so much junk here. Let me see if I can give you a good I want to give you guys a really good representation of what happens when VIX goes above 20, okay? And I want to give you a representation that you will never forget. So let me see if I can do that right now.
Okay.
Let's see. One second. Here. It's coming up on my screen. It's very, very important. Okay, see that? Do you see Clyde on my screen?
Yes.
See him
Quite a
standing?
look.
You see him standing up?
Yep.
Okay, that's red alert. He's on high alert. Okay. So when you see VIX above 20, Clyde is on high alert. See, you won't be able to get that image out of your head, right?
No, it's there forever.
That's why I wanted you to see it. Once you see that image, that's hot, Clyde on high alert. Clyde goes on high alert anytime. I knew I'd get you with that. Um, I love it. That's Clyde on high alert. And when he's on high alert, that means VIX is above 20. That means we got to be really careful. We got to put our helmet on. Okay. We got to put our helmet on because we don't know what's going to happen. Okay. We don't know what's going to happen. So that's basically how, and what happens is your options become much more expensive because if VIX goes from 15 to 20, that means um, the option is going to become worth about 25% more. Okay. Very, very, very important. I see somebody's trying to log on here as Roger Scott. Maybe that's Matt. I don't know.
That would be Matt, because that's the default, Roger, when we come into the room and then
Yeah.
you change your name.
I don't know.
So,
Something must be going on with his
but he's
he can't even tell me on Teams what's going on. I hope everything's okay with him. This is very, very unlike him. But anyways, let's move on. So that's what the volatility index does. Okay. That's what the volatility index does. Yeah. So when Clyde does that, that's VIX going above 20. That means you're on high alert. All right. Well, I see Matt changing his face now.
there we go.
Matt Horton, maybe he's getting closer to coming in here.
Yep.
I don't know. We'll have to see what happens. All right. All right. So the next question I got a couple of really good questions.
So Roger, before we
Yes.
move on, I
Yes.
think what you're
Yes.
saying is that the myth everybody needs to understand is that there's not an inverse relationship necessary between the VIX and the SPY.
You
Or
know,
is there, Raj?
there, you know, if okay, all right. And that's a great and you're right. That is what I'm getting at. Academically, academically speaking,
Mm-hmm.
it's supposed to move up when the market goes up or down.
Okay.
Academically speaking.
Okay, there you go.
Academically speaking, I keep saying that over and over again.
Yes, technically,
But
yes.
based on my experience as a trader, I hardly ever see him going up when the market's moving higher,
Okay.
even though it's supposed to. So academically speaking, it's a volatility index, but practically speaking, It's a fear index, but you never heard it from me in case I write a book in the future.
All right,
Okay.
we'll
So
erase this from the
yeah,
tape here.
we'll have to erase that. We'll have to erase that from our memory.
Okay, cool.
So again, that's really so again, it's a for all intents purposes, if VIX is above 20, you should be very careful because the market's usually not doing great.
Okay.
And if it ever and here's the irony: if the market's moving up 4, 5, 6, 700 points a day, nobody's going to be looking at the VIX anyway. You know what I mean? Nobody's going to pay attention to the VIX. Okay. So now I want to talk about before we move on, and I haven't given you my top stocks yesterday, so I want to give you my top stocks. Let me do that right now because there's a lot of stuff I want to talk about today. Yeah. All right. Okay. So as far as the broad market is concerned, and this is important to talk about, this is pretty important to talk about. Let's see here. We got 68. No, we got 40. Okay. So as I mentioned to you guys before this morning, before we get really too deep into the analysis and anything like that, um, you see how we're kind of right at the 8-day moving average. We're right at the 8-day moving average. Okay. And I don't have a problem with that as long as we don't start coming off right now. As long as remember yesterday we came off, we went we went down a little bit. We did this, we gapped up, we went up, and then we fell apart. And today, and then we ended up closing above the close. And then today we're kind of doing sort of the same thing. Well, if we break this level, 663 level, I want to show you guys this. We're already below. Well, yeah. If we break this level right here, there's a the 5-day. You just take my word for it. I can't show it to you right now because I have it in my other computer right here, and I don't want to take screenshots. But just take my word on the fact that the 5-day point of control is right at 663. Actually, it was just moved. Sorry, it was at 663. Now it's at 665. More volume is now at 665. So we're below the 3-day hold, but there's some support here. And if we go below 663, if we really start falling below 663, we can test this area. Now, before you get too scared or nervous or anything like that, remember, it took a lot of movement to go from here to here. So if we come off and we make a lower low right here and then just kind of sit around here, it's not going to be a big deal. Okay, it's not going to be a big deal. It's not going to be a big deal at all. Okay, so I'm not really too concerned about this as long as this doesn't go haywire and really like starts falling off. But this is and remember what I said this morning. As long as I said even, and I was very very clear on this. I said we may have a dip like this, but as long as we recover and stay here, we're okay. I did say that this morning. So
Yes, sir.
this this could be just and again, look, low, higher, low, higher, low. If this was to close here, we're still making higher lows. So I'm not that concerned about it. My concern is if we really start selling off with real selling pressure and coming off and coming into this range. But dipping our toe into this area is not a big deal because I mean we have a high volatility. We have a lot of volatility right now, and we're in earnings. So this doesn't really scare me very much. Okay. If we start really falling off and staying here and coming into this area right here, this area here, that will scare me. If we end up staying in this area, and this is really important. I know I'm spending a lot of time on this, but this is really, really, really important. So if I'm here and as long as I drift around here, go up or down, the longer we stay in this area, the better it'll be because that what means is price discovery is okay with is telling this bar we're not interested. We came down, boom, we bounced up, we tried to break down again, we bounced up. The next day we opened above and we closed above the 8-day EMA. We're on the 8-day EMA right now. This is okay. This is okay. Every minute that we're staying here and not coming back here it emboldens the bulls. Okay, that's what we want. My concern is on mega caps, we weren't able to close above that level.
Right.
And I mentioned that this morning as well. I said that's
Mhm.
my concern. But on the other hand, look at SMH. So they're doing amazing well. See, this can come all the way down here, and I wouldn't care because this is still above the 8 day right here. So I'm all good with that. I'm all good with that. Okay. Uh, Michael made 25% on the key spread, on this spread. Yeah, I'm going to talk about that in a few minutes as well. Okay. So just wanted to show you kind of the dynamic of where we're at. And by the way, for those of you who there was only one person, Carla, who was asking me about the levels. I drew this level for you guys in the morning today at 8:45 in the morning or 8:30 in the morning. Look at the level. How valuable would it know? How valuable would it be to you to know the high on SMH 2 hours before it happened? I think that's pretty darn good, don't you think, Raleigh?
Yeah, absolutely. Look at that.
That was that was a
Amazing. Yeah.
level. That was we drew that. We drew that. We drew that. This did not happen when we drew these levels.
Mm-mm.
Okay, that did not happen when we drew these levels. Now, here QQQ, and you can see these levels on the QQQ this morning as well. They came right down. We broke right here, and then coming right back down. So, oh, and you could see on the QQQ, it's actually a really good example. We're literally right now, right at the 8 day. Look at that.
Yeah.
Or we were there, and look how we bounced right here. Let me make it bigger, and we bounced right off of it.
Right off of that. Hey, Raj, quick question here. When you draw those levels in the morning, are you doing those on a daily chart or an hourly chart?
I'm using a 5 minute chart.
5 minute chart. Okay. Yep.
5 minute overnight chart. That's all I'm using is 5 minute overnight charts. Okay. Cyrus says, without seeing the levels, I cannot decide to trade at any time. Wow, that's good. Very good
It's one of
information.
those things, if you get used to it, Roger, and you take them away, you feel strange.
Yes. Yes. Now, let me really quickly tell you about a time spread that we did. Thank you, Data Miner. Okay. Because of Data Miner, we were able to find this spread. And what we did was, now let me show you this trade, guys. This is great. Keys had earning this morning, right?
Okay.
We sold the 1750 and we bought the 1750 yesterday. Okay. We did that for most people paid 12, a couple paid 13, and like two paid 14. And I don't know why you paid 14. I told you not to chase it, but it doesn't matter. The point is, I told folks to put a 25% profit target on their fill this morning. I mean, as soon as they got the trade last night for 12 cents to put it in. Now, right now, you could see it's how much is it right now? Right now it's 16 cents. So we paid 12, 13, 14. It's 16 cents right now. But I want to show you guys something really, really cool. In case you still have it. Now, this is where things get interesting. Keys is bouncing off the 200-day moving average. Okay. This is the 8. This is the 8. That's the 15. That's the 200. And blue's 50. And red and white. This is the American flag. Red, white, and blue. 50, 100, 200. We're at the 200. There's a good chance this is going to bounce up. I want to show you guys something really, really eye-opening. Now, check this out, Raleigh. So you guys paid 12 to 14 cents on it. And let's say 25% in 12 hours is just not enough gain for you, okay? Okay, I get it. You want to be a little greedy. If tomorrow, it's right now it's 1705, right?
Yeah.
If tomorrow we close below 1750, what will happen to tomorrow's option? What will happen? Come on, guys. It's a simple question. We're short this option. What will happen if we trade below 1750 tomorrow? Worthless. Thank you. Thank you. Somebody worthless. That's right. Expires worthless. Now, you see the one that you have right here for 24 cents? It doesn't expire for 8 days. You paid 12 cents for this option. So, hypothetically speaking, let's say that this stock goes up 17.25. Okay. This will be worth about 30 cents. This will be worth nothing tomorrow. How much did we pay for the spread? How much is 30 cents if you pay 12 or even 14? Does that sound like over 100%?
It sure does.
And you know what this has to do? Nothing. Nothing. 18-cent profit. Exactly. Do you guys understand what? And it's earnings season just begun. And we use data miner to find these options. I already got another one today it's in the oven that we already put on. And so, do you guys understand the power of this, of time spreads, and why you should use this to trade earnings? If you went on earnings and you just bought a call yesterday, that call would be down by about 60%, 70%. I
Hmm.
just showed you a way how you could have taken 25% this morning and potentially make 100% if you do nothing for the next 24 hours. That's that's how you trade earnings, my friends. That's how you trade earnings. Okay. All right. So sometimes when I show demonstrations, people don't care. But when I show actual trades, they're like, wait a minute. This is really great. And you
Yeah.
know what happens when we do trades like that? Here's what happens when we do trades like this. Look, people like people like people like Michael made 25% profit on what you said this morning. Thank you, Michael. Not bad, right?
It's
Here,
fantastic. And look what Ken said, time spreads are nearly magic when you trade them well.
and that's a post PhD from MIT.
Right.
So he knows number in math. He knows numbers. He may not know everything, but he knows how to bake and he knows numbers. I'm just giving you a hard time. I'm just playing around with you. He
And
bakes.
the other thing is this, Roger. I just posted the link to the YouTube channel because, folks, for those of you that are wondering, yesterday's VIP session, Roger went through this step by step, how he basically looks at the earnings plays that are out there and how he boils it down to his best selection. So go to yesterday's VIP trade room and watch that if you'd like to see step by step how Roger does this.
Yes. Yes. All right. Oh yeah, baking is science. Mario says, how do we set the profit target? I just put a limit order. Yeah, like I tell you. So I wanted to show you that before we move on. Okay. The next thing I wanted to discuss, and the reason I talk about it so much is if you guys are not trading time spreads, you're Michiganer, okay? That's all I'm gonna say, because they're amazing. Low price, limited risk, taking advantage of earnings on the side of market makers and not going and not having no income, none of that, potentially a limited risk, potentially unlimited profit potential. Okay. That's what I'm talking about. Okay. So now the next section I want to talk about is when you should use 0 DTE and when you should use 1 DTE options when you're day trading. Okay. All right. Something we talked about. Now, remember a few minutes ago, we talked about, let me just see what the SPY is doing. Yeah, SPY's cooling off when below that level. Okay. All right. Let's see. And let's see. Yeah, interesting. All right. Remember, we talked earlier today. This is why I wanted to bring in these two conversations together. Okay. Remember when we talked about, VIX, the volatility index? And
Yes.
I explained to you how over 20 means Clyde is standing up, code red, high
How
alert.
could you forget?
Right, exactly. That was my point. And see how VIX is going up right now? Well, what happens is this. Let me show you a little trick. I'm going to show you a little trick, guys. You're going to like this. AbbVie decided to cooperate. So let me show you something. So here you are. Let's just say, hypothetically speaking, nobody's giving you a signal right now. Did Trump talk by any chance? Did Trump say something? Matt, did you get your mojo back? Are you able to come here now? Or did everything fixed? I'm asking him because he's always listening on those big ear pods of his.
Oh, it's 3 p.m. is what Ted just shared. He's scheduled to speak at 3
Yeah,
p.m.
it's not him yet. I am here.
Wait, what happened to you? Tell us. This is people love to hearing this the best. The stuff that's unscripted. Go ahead, Matt.
I'm actually still in the restroom. Was having some stomach issues, which is why I was having so much trouble getting everything loaded because I was trying to do it from my phone. And normally I remote into the computer at work, which is no problem, but that's all packed up. So my
Oh
plan
yeah, right.
B went out the window.
Oh, I understand. Well, I'm glad you gave us the full update. So you're okay. The baby's okay. You're okay.
Yeah, everybody's okay. Just my stomach
Okay.
is.
He's got Montezuma's revenge. Like you, Richard. Richard and Matt both have stomach issues. Ay vey. All right. As long as he's okay, I just want to make sure he's okay because Matt's like a time clock. All right. Thanks, Matt, for the update. So remember what I said? 663 is a man. Now, here's a good example. What did I tell you guys a few minutes ago? 663 is a key level. It's a key level. Look at how the market sped up after we hit 663.
Oh
That's
yeah.
a that
Yep.
and we talked about that what 10 minutes ago, 15
Hmm.
minutes ago.
Before it hit. Yep.
So a lot of people are like, Roger, how come sometimes you give a stock and the stock just moves? How do you do that? Because I know my levels and what I try to give you every morning and this point of control and all that's, by the way, point of control is back to 663. It went to 665 for about 5 minutes and now it went back to 663. The last 5 days, 663.05 is the highest traded level on the SPY. Okay. Understand why that level was important to me? So I said we're either going to hold that level or we're going to break. Yes, that's right. That's right, Klein. 660.30. So you exactly. I have it at 663.08 right now. Okay. And yeah, that's where my level is. I want to show you this. 1 second. I want to show you this. No, I'm not going to be able to show you. It's on a different computer. But trust me, if you have the market internals, you should be seeing the 5-day, 5-minute point of control right at 663. But that's how we knew. That's how we predict these high volatile areas. Okay, so let me get back to my discussion. So volatility. So when you see VIX over 20, you're going to you end up paying a lot more premium for your option because volatility is moving higher. So, do you guys remember there was a period right here? Do you remember this? Do you guys, Raleigh, you remember this? It was when was it? It was around April
Was
when
that the Independence Day thing?
no, it was when Trump threatened to fire Powell for like
Oh,
5 days and then he went back on it. And folks, I'm not getting into a political discussion. I'm just referencing a time period. You remember it was a whole big thing. It was like a big deal. There was a lot of talk about
right.
undermining the federal government. It went on for a week, and then it never happened. Well, that's when this happened. So I'm going to tell you guys something. Okay, I want to tell you this, and folks, I'm giving you real insightful stuff right now. When this happened right here, and Matt and I were trying to buy options. Okay, yeah, like a few months back, we were trying to buy options. These options that usually we're paying about $2 to $3 for zero DT options, right? Well, these options were like $6 to $9. I'm not kidding you. They were $6 to $9. And we actually went several days just not being able to trade because a massive move was priced into these options. Okay, you remember that, Bob? You remember that? Yeah, implied volatility shot up. The VIX here. Where was that graph? I just had it here. Or you could see it right here. See this? See this, guys? So think about this for a second. And sometimes I could be dramatic, but I'm telling you, this is not being dramatic. I'm being really factual. When VIX went up from here, from like 20, 30 to right here, the options doubled. When the VIX went from here to here, they doubled again. So right here during this very brief period, like I said, it only lasted about, I don't know, 1, 2, 3, 4. Like I think it lasted about a week, maybe even
Yeah.
less.
If that
It
was
was,
April, that was
yeah,
Independence. That was
yeah.
the tariff announcements.
The
Yep.
tariff, yeah, it was the whole tariff, and then he started threatening Powell and blah
Threatening
blah
everybody.
blah.
Yep. Yep.
Trump, Clyde was on high alert, but the most important thing is when you looked at these options, this option was like $9, $10. So the lesson here is this: I'm going to give you guys a little trick. Okay, yeah, Liberation Day, and again, folks, this please don't even remind me of that. I don't want to be reminded of any of that. It was awful time in the market, very scary time in the market. But when it happened, this is what we were doing. Okay, there's two ways to deal with it. Okay, one way to deal with it is go in the money. Go in the money because if you go in the money, okay, if you go in the money, uh, the only part of the implied volatility that will be taxed is the part that's out of the money because implied volatility can only increase on theoretic value, not actual value. So look, let me show you something. I'm holding two hands up, okay? This is actual value. This is the value of the asset. This is the option. See the area of my hand that's above these fingers? This is the only area that will be taxed via implied volatility. So if you buy an option that has, say, 72% intrinsic value, I'm just pointing at this or here. If you buy an option that has, say, intrinsic value of over a buck or a delta of a dollar right here, you're paying very, very little premium. You're paying very little premium. So you're going to pay more for the option, but that option is going to be able to actually move freely versus buying an option that's out of the money where if it moves 20, 30 points, you're going to be losing money because that 20, 30 point move is already priced into the option. And that's the problem that a lot of folks don't seem to take into account. There's another way to do it. And I actually like this way a little better because it gives you better staying power. And I don't think I've ever talked about this before, is to do a debit spread. Because here's the thing. Remember, options are overvalued. Well, the option you sell is going to have more implied volatility than the option that you buy because you're buying the more expensive option. I'm going to repeat that, and I hope you guys write this down. When you do a debit spread and implied volatility is high, you're getting the benefit of selling an option that's above your strike price of the option that you bought. That means your premium that you're paying for your option, that when you're going to buy, not sell, is going to be offset a lot by the option that you sell. You're buying an expensive option, but you're selling an option that's even more expensive volatility wise. Understand? So for example, let's say so for example, you buy the 661 and you sell the 662, you pay 50 cents for this, right? But this option here, this 662, it has a lot more implied volatility than the one that you bought. So you're using implied volatility to your advantage by
Yeah.
selling an option that's also over. So folks, now a lot of folks are like, well, Roger, I don't day trade the SPY. What do I care about? Check this out. It works the same thing with stock. It works the same way with stocks, folks. Oh, what? Stocks? Now I'm listening. Now you got my attention. So listen. There is an advantage when implied volatility is high. There's a advantage. There is a major, major advantage to doing debit spreads about 8 days out. Why is that, Roger? Because the out of the money option is going to have a high implied volatility. So you're going to be able the same concept applies. If I buy the 125 and I sell the 130 is going to have almost twice as much implied volatility as the 125. So you could use that to your advantage. In other words, it's a way to buy debit spreads really cheap. Okay? Do you guys understand what I'm saying? So the point of this, uh, the point of this is to always take advantage of the volatility. If implied volatility is low, you don't need to do any of this. You just buy an option. What do you need what do you need to offset anything for? But if implied volatility is expensive, that's going to change your trajectory. Now, the next question is, and I'll answer this question for both for stocks and indexes. If implied volatility is high, don't buy 0 DT, buy 1 DT. You'll have more staying power, and your offset will be much better. Okay? Will be much better. If volatility is really, really low and it's very early in the morning and you're a scalper, notice there's a lot of ifs there, right, Raleigh? There's if you're a scalper, if there's three,
Yeah.
Then would you then go ahead and just do a debit spread. So let's say, hypothetically speaking, you don't hold positions for over 15 minutes. And I know a guy who day trades. He's a scalper, and his rule is this: if a trade goes, if he puts on a trade and the trade doesn't start making him money within 15 minutes, he will just get out of the trade. That's just, he uses time
Just move
stop.
on. Yep.
Yeah, he just basically, hey, there's nothing going on. It's just drifting. I'm out. That's what he does. So if that's your thing, then you don't need to really go 1 DT, because I don't think you're going to see too much decline in 15 minutes. But sometimes when we put on trades, like when Matt puts on trades, they can last for 3-4 hours. You're going to lose half of your value if you buy a 0 DT option. So you want to buy a 1 DT option, or even maybe a 2 DT option. I hope you guys pay attention, and I hope you guys, Raleigh, did I already go over the stocks that I like for today, or I haven't done that yet?
I have not done that yet.
All right. So keep all this in mind. Now, I know I threw a lot of stuff at you right now, but let's just do a real quick summary of it, okay? Okay. Implied volatility impacts how you trade the market. When implied volatility is high, when VIX is over 20, when implied volatility is high, I'm giving you a summary right now. When implied volatility is high, options balloon in price. Why do they balloon in price? Because if the market's moving, market makers suck at market timing. They're bookies. They want to increase the premium here, increase the premium on both sides, and capture. So they don't know which way it's going to go. So they're going to insure themselves. They're going to protect themselves by going both ways. Okay, that's what they do, and you have to pay for that. So the way you do that is by either going deep in the money, hiding from the volatility, right? You're hiding from it, because only part that gets exposed to implied volatility is time value, not intrinsic value. And if your option that has 85-90% intrinsic value, you'll pay a little tax, but you'll have an implied volatility tax on $1 instead of $9. You know what I'm saying? Big difference. And what you have, it will be intrinsic value. On the other hand, another way to do it is to go a few days out and do a debit spread. Why? Because if you're buying expensive options, you might as well sell an expensive option while you're at it. You might as well. So, okay, let's take advantage of these expensive options. All right. So again, very, very, very simple tactic to help you out. Stocks, 8 days out, 10 days out, especially if you're day trading or just doing debit spreads. Why not go further out? Because you're going to get a cheap deal. You can just always roll it over if it expires for the next 8 days later. And B, that 8 day, you don't want to go too far out because implied volatility is not going to be there. So really, really important that you do those things. Okay. Actually, what I'm talking about is not in another language. It's real basic stuff. And if you guys don't understand this language, then you better learn this language.
Yeah, exactly.
Because if you don't learn this language, you're going to get ripped off on your trades. You understand? I'd rather explain this to you and teach it to you instead of you buying an option out of the money 3 strikes and sending me an email and going, Roger, the stock keeps going my way and I keep losing money.
Yeah, how's that? How can that happen?
And
Yeah.
I get an email every day.
Mm-hmm.
I got an email a few days ago, and folks are like, well, he bought an option, he bought a short, and he bought a put. I don't remember the ticker symbol, but I remember the strike price. It was a 12.50 put, and the stock was at $14, and the stock kept going down, 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 and his option kept decaying. And he's like, the stock, and I look at the stock, and I'm like, how could you be down on your option? The stock keeps making all-time lows. There's no way you can be down. I'm like, what strike price did you buy? Oh, you went 20% out of the money and you're wondering why. So you learn, if you don't understand what I'm saying right now, first of all, if you keep coming here every day, you will understand what I'm saying because I explain this all the time. Second of all, if you don't understand what I'm saying and if I'm speaking a different language, then you better learn this language or your ass is going to get ripped off in the market by the market makers and they're going to be laughing at you behind your back. And I don't want that to happen. I want you to be laughing behind their back. Okay. So really, this is really important stuff. Okay. Really, really important stuff. Um, so
Roger, the
VIX,
comments are off the charts. One of the best
excellent.
sessions you've ever given, and you do this all the time. And once again, for somebody who's just coming here maybe for the first time, yeah, you've just come in and you're all the way in the left lane on a 4-lane highway, but that's
Yeah.
okay. That's okay. Keep coming and it'll start to make sense. But Roger, yeah, you can't dumb this down. There are things that need to be understood, and particularly if you're trading options.
Right. Yeah. If you don't understand this stuff and you're trading options, you're just flying blind. Because think about it, logically speaking, if I understand all this stuff and I use it to my advantage every day, and you don't understand this stuff and you don't use it to your advantage, are you going to take my money or am I going to take your money? Because that's really the
Yeah.
bottom line.
Mm-hmm.
That's the bottom line. One of us is going to take each other's money. It's a sub-zero game. I mean, we're going to. So, all right. All right. So now let me give you stocks. Now, what I'm going to talk about some day trading levels. I'm going to talk about, this is going to be the last day. We're going to talk about Alpha Zone Pro. But I want to give you some stocks that I'm looking at right now. Some really nice looking stocks. You don't need to pay attention to this, although this is the most beautiful 5-minute chart I've seen in a long time. That's a good day trade right there, by the way. If you're looking to day trade right now, this is a nice day trade. It's a very nice day trade. This is a nice stock, not overextended. Root, definitely add this to your list. Now, I'm going to keep the options open here just so we could see how liquid the market maker is, if the market maker is willing to play or not, okay? All right. And I'll Raleigh, please. I know I don't know anything. I'm not opening up the chat. I'm doing my job, but maybe you can get like the best questions and ask me before we move on to the next segment.
Yeah,
Okay.
exactly. I'm
After
keeping notes on that. Yep.
okay. Perfect. Perfect. Thank you, sir. Well, at least we know that Matt is okay. I just wanted to make sure he's okay because Matt is like a time clock, a little overextended, but not a bad short. Fast. Breaking the 200-day moving average. My suggestion would be to wait for it to break 41.46, but if it does, you got a clean break off the 200. And by the way, if you know how I talk about intraday price levels, where the 200, the 100, and the 50-day moving average are daily levels. Those are major daily levels, and they work exactly the same way as the intraday levels I talk about. We look for reactions off of these levels. Okay. Oh, that is beautiful. I'm going to circle that. That just looks fantastic. It's a nice looking short right there. And liquidity is good too, by the way. We're cooking with gas today. That is a very nice looking short. And by the way, I've been really bearish on this stock. I don't know why I haven't given it to you guys. I've been really bearish on the stock now for a while. I like this stock. QFin. Yeah, you can get it off on this stock. The first ticker was Root, and then PGR, Fast, OKE, QFin, and then next one, I like this stock. Yeah, it's a nice look. 1 second here. Need to mark something down here.
These are all shorts, by the way, folks. He
These are all
starts with the shorts and then he'll go to the longs.
Yeah, these are all shorts. These are all shorts. Yeah. Sorry, I just needed to check something. BWIN. Beautiful short. I got to tell you, I'm finding you guys some very nice shorts today. Very nice shorts. Indeed. Oh, that is beautiful. The hell am I doing not trading these stocks? I don't understand what's wrong with me. Got to
What
get in
ticker
on
is
this.
that? GDDY? Yeah.
GoDaddy. Yeah, GDDY. Yeah,
Yeah.
GoDaddy. These are some really good stocks. I gotta. And then don't give Matt. You better close your ears for this one. He doesn't. He won't short garbage stocks. He loves garbage stocks. This is literally a garbage stock.
And folks, I'm keeping
Well,
track of these. I'll post them when Roger's done.
I did like the garbage stocks. They've fallen out of their. I'm not so rose-colored glasses on them anymore.
So you're okay with me shorting garbage stocks now?
Yeah, I just my one thing is I don't short the rat.
Right. Right.
That one I won't give up on.
Disney. He won't short Disney. The Magic Mouse, the rat. Disney. He does. He does. He does. He doesn't like. So those are my shorts. Now let me give you longs. WDC. That is a very, very nice long. Guys, earnings. So very short term. 16th, 23rd is earnings. It's a very nice A line. Matt won't take it because it's earnings coming up. That is a very nice A line. Actually, let's see if it's ready for an A line. Nope, not yet. Almost there. Just a hair higher and it'll be an A line. Earnings. Day before my birthday, you got earnings. All these are probably good for the pit still. That's a very nice A line right there. And it's breaking out, by the way, right now.
It's WST.
WST, yeah. Real nice. I'm giving you guys like red meat today. See, I have to compensate for Matt not being present. Google still looks good. Actually, I really like Google here. Keying off of yesterday's bar. I like Google a lot. Let me add it to my, I want to add it to my watch list. Okay, I like Google a lot here. And I like how, let me just see what the SPY is doing. So it's just mimicking the SPY. Okay, all right. I like Google. I like RLKB. I like the stock. I prefer it a little stronger above the VWAP, maybe 69, like above this high, but I do like the stock, Rocket Lab. CSX. We've been talking about this stock lately. It's a very nice looking stock. And Johnson and Johnson. Johnson and Johnson. I also like Tesla for a swing. At least I like. We day traded it. We made a little money on it. I still like it. I'd like it if it was a little stronger, but I like it. I don't hate it unless it started breaking down. I really like this stock. I like this stock right now. Okay, that is my list. Let's deal. Mike, you want me to look at Micron? Let's take a look. Yeah, it doesn't look bad. Chip stocks look good right now because the chip sector's in an A line. So anything in chips right now is just going to be an automatic A line. This is why I like the market so much right now, because we're coming back out of an 8-day EMA, and that's why I'm not really that bearish as long as we can maintain. We're kind of went full circle now where we started. I want to see us get back above this area. But as long as we just stay around here, see how it made a higher high and it wicked off right here, Raleigh, just like we were talking about an hour ago. That's okay. I don't mind that as long as this ends up here.
Yeah.
You guys get it. You guys understand what I'm saying. Now, I highly recommend that you guys take an hour later today and rewatch the lesson that I gave you on trading this stuff because it's really, really important. All right. Really, really important, especially the um um the implied volatility. Folks, implied volatility is huge. Huge. Okay. Huge, 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 huge. I know folks who make their living just trading implied volatility and the disparity between implied volatility. It's you can make implied volatility the most advanced and complicated concept that you've ever seen in your entire life, or you can keep it really simple like I do. Okay. And I'm trying to dumb it up for you. There are books like this about implied volatility. They're completely useless. But if you think that what I'm talking about is different language, trust me, I'm not. I'm talking about very, very simple, basic concepts of disparity between implied volatilities. Okay. All right. Yeah. Today, this show right here, let me just post a link for you right here on
They've
YouTube.
got the link. Yeah, I've posted the link for everyone.
Okay. And then I'm just going to post it here on YouTube. There you go.
Mhm.
YouTube.
Yeah,
All
so
right.
yesterday and
Yes.
today, guys, you go to the VIP room and these back to back, Roger's going to take you first of all through the data miner and how he selected in, stuff as it relates to earnings. And if you flow through to today and take a look at, the way he sets up the market, what he looks like, the discussion around volatility, implied volatility, and how to leverage it to your advantage, it's worth its weight in gold. And
Perfect.
it's there for you. You can get it right now. You can watch it now if you want to.
Now, Raleigh, I'm going to go literally 50 steps from here and grab myself a drink of water for the next
Okay.
segment. And meanwhile, you put together a few questions for us
Okay.
from the group, and I literally will be back in 30 seconds.
All
Okay.
right. That
All
sounds
right.
great. Outstanding, folks. So once again, if you've got some questions here, you can put them in the chat panel. I think primarily as I'm looking through the chat panel, there were some questions about, calendar days versus business days. But pretty much everything was been addressed. Yeah, a lot of people wanted to know if we could have a list of this. Yeah, Matt's he's a true company man. Yes, he is. Uh, I like what Ken's statement is. Looking deeply into implied volatility is a quick road to insanity. I can only imagine, Ken. I can
It
only
really
imagine.
is. I tried it. I tried it a few times. If you want good, if you want good bedtime sleeping material, those implied volatility books will. Let me tell you a really quick story. Okay, really, really quick story. Um, Back in the day when I started trading, I read about implied volatility. How you're supposed to sell implied volatility when it's expensive and buy implied volatility when it's cheap. I tried following that advice. I got taken every single time. And after that, I stopped using those books completely because I realized they're all based on theory. They're not based on actual market things. And theory is one thing, but reality is a whole different world. Maybe in 1975, when we didn't have instant computers, you can arbitrage volatility. Right now, you just have to play with it. Let's answer some questions before we move on to the next segment.
Absolutely. So there's really a couple, Roger, that were here, and one was just posted here, and I think it was a pretty good one. And that is this: can time spreads be used anytime, Roger, or is your recommendation or the way you like to do it just focus on stocks that are going through earnings?
That's a really good question. Okay, that's a great question. So time spreads and earnings in I'm answering your question. I'm just closing a couple of tabs on my computer. That's actually a really good question. Time spreads and earnings have nothing to do with each other. Time spreads you could do anytime. The problem is not a problem, but the way I do time spreads is I combine the advantage of a time spread with implied volatility. So so here will be the problem. If you do time spreads differently than me, you're going to pay uh, 80% more debit than I will. So you will have a lot more to overcome over the next few days. The way I see before earnings, the day before earnings or the night before earnings, when nobody knows what will happen with the stock, the options that are going to come into earnings that day, they go crazy and implied volatility goes through the roof. usually 150% increase from the previous day. And what I'm doing is I'm taking advantage of that implied volatility, knowing how often the price stays inside the zone to sell really expensive option and buy a dirt cheap option because the option I'm buying is a week away from earnings.
Right.
So so what I'm doing is I'm steroiding the time spread. I'm taking a time spread and I'm putting it on steroids. Like I'm taking the Hulk. I'm taking what's the name of the Hulk? Whatever his name, David.
Oh, you don't mean the wrestler Hulk Hogan. You're talking
No,
about the
no,
Green
the
Hulk,
Incredible Hulk,
the
Bruce
Incredible
Banner.
Hulk, Bruce Banner.
So I'm taking Bruce Banner and I'm making an Incredible Hulk out of him by doing what I'm doing with time spreads. I'm literally taking a time spread to a whole new level by juicing it on earnings and combining it with the data of how often the earnings don't supersede those levels. If you can
Great.
have that data, which we now have in Data Miner, you can do that. But you don't want to do that on a stock that outperforms earnings 90% of the time because then you're gonna lose money. So it's a combination of things that I see that work together that you can't do. So yes, you could do time spreads. They're called calendar spreads. You could do them anytime on many different assets. But the way I do them is I combine earnings and time spread into one trade, and that trade does very, 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 very well the vast majority of the time because I'm taking advantage of three things at the same time. Hopefully that answers that
It
question.
sure does, because Roger, the key thing that you mentioned here is the relationship between implied volatility and the time spread. And then you look at what's happening around earnings because they are not related. But earnings gives you the IV situation you're looking for. As you said, turning Bruce Bannon into the Hulk. And
Right.
that's just a great way to leverage the time spreads. And Roger, ever since you started sharing those time spreads, what, going back maybe a month or 6 weeks or so, man, people are like going like, Roger, these are killer.
Yeah.
And to that point, folks, Roger yesterday in the VIP room patiently, step by step, walked through how he uses the data miner to find the optimum time spread for him to trade. And Roger, you know what was great? I mean, there were some false flags in there for me. I was looking at some that looked perfect, and you would say, wait, wait, wait. Let's take a look at what's going on here. Let's take a look at how much is it going to cost us or whatnot. So
Right.
extremely valuable information.
Yeah, I literally get, yeah, I mean, for those who know a little bit about trading or a lot, I gave you guys I'm giving you gold mine.
It's a
Like I'm giving you
masterclass. Yeah.
really valuable information here that most people will not even get. Well, the people that'll charge you money don't even understand this stuff. But most folks who just keep this to themselves. These are like real edges that work really, really well. And now the only problem I had with it is I had no way. I had to manually scrape the data that tells me how often earnings outperform. Now it's in Data Miner. I got it now. So somebody asked me a good question. Will Data Miner, it doesn't scan yet. Well, Michael, what do you need to scan? All you need to do is put at how hard will it take you to find out what stocks are reporting tomorrow morning and tonight after the close? 30 seconds? That's your scan, my friend. Good luck to you. There's your scan. So yes, I'm going to add that in, but it's not there yet. But how hard is it for you to get that info? How hard is it for you to find out what stocks are reporting tonight and tomorrow morning? 10 seconds on Google? That's your list. Good luck to you. So the last question. Good question. Where do we give them? I give them as bonus trades in the pit almost daily during earnings season. We gave one yesterday, and I already gave one today. So we're always giving them in the pit. All right. No, it's included in the pit, not in AlphaZone Pro. Speaking of AlphaZone Pro, do we have any other questions, or are we ready to talk about?
The only other question that I had here was this was a question back to the debit spread trade. And Manny was asking, he says, hey, when you talk about the days out, is it typically 10 days expiration? Is that what you're looking at, Roger, on the
Yes.
debit spread?
Yeah. Debit spread, 10 days or less. 10 days or less. Yeah. Even 4 days or more, 10 days or less.
Okay.
Because you want to take advantage of that out of the money option that you're selling.
Yep.
All right. Let me go ahead and unshare my screen real quick, and then I'll share it again. Now, today's going to be the last day. Now, folks, again, I always have a lot of good information for you. Am I still sharing my screen or no?
Not yet.
Okay, good. So I stopped the share. Okay. Oh, there we go. Okay, good. Let me just turn this off. Let me close this here. Just want to turn a few things off here so that my computer has enough staying power for the webinar. It'll just take a second.
And for those of you that are on YouTube, this would be a great chance for you, or a great opportunity for you to come into the Zoom room for this portion of the presentation. We'll be closing the YouTube feed in about a minute.
Yeah. YouTube is still open, right?
Uh-huh.
Okay. It said live feed. No, it's actually it says live feed is over. I got a live feed over about 10 minutes ago or
Oh,
whatever.
did you? Let me look at
Yeah, I
this
don't know
right
why,
here.
but
Oh,
folks, yeah,